Hey, Lifetech advisors, great job. You got to the fourth video. So proud of you. If you are watching this video, you are about to see the ultimate dream come true. We've been through 3 videos already. We've talked about how to capitalize the system, the first toggle. On the Child Millionaire tool, you've talked about the safe start asset funding early. You've talked about the ultimate buying a home, the ultimate way to appeal, the ultimate way to show up different with your clients is to show parents or grandparents, anybody that has a relationship with a child, the value of showing up different, the value of showing up with the ability in their family's life, in their children's life, for that child to afford their first home or potentially a second home. What does that built-in down payment look like to your clients? And more importantly, what does it look like to you? How do you show up offering your clients in that first meeting, that one-time opportunity that you ever get with your clients? Not only are you going to show up with credibility, not are you going to show up only with the ability to not confuse the mind, because what does a confused mind say? That's right. It says no. You're going to get them into a second meeting. You're going to get them into a third, fourth, and fifth meeting. You're going to show them value. You're going to make money and serve people. Have your cake and eat it too. Make money and serve people selling whole life insurance. Identifying conceptually the idea of infinite banking through the lens of a child. This is why I created Child Millionaire. All right, we're going to dive into real estate investing. This has been the ultimate goal from a passive income perspective for so long. My only question is real estate investing having 1, 2, 3, 4, 5, 6, 7, 10 doors? Is it passive? You got to collect the rent. You have to cut the grass, fix the toilet, evict the tenants. Some markets in Canada and the United States, the laws are so heavily weighted against landlords when it comes to having tenants, managing them, vetting them. It's not so passive. But what happens if you could show your clients the dream of passive income through real estate investing with a hedge? That hedge is the life insurance contract. By purchasing your investment properties effectively through the asset of a life insurance contract, you're now initiating the and asset. Dear friend of mine, someone I admire so much, Caleb Gwillems, he wrote a book called The And Asset. He describes it better than anybody in the industry. Heavily recommend you picking that up. We'll probably put a link to the book down here somewhere. All right, so check that out. Okay, this part of the presentation, as you're sitting with your clients, this is a very simple slide. This is going to be a really quick video. All that you're doing is you're sitting down with your client and you're just going to show them what's possible. You're going to show them some value. You're going to give them a kind of a break. Due to the fact that the three calculators leading up to this one have been involved, there has been some sliders, not spreadsheets, sliders. We don't sell from spreadsheets. You can illustrate down the road, second, third, or fourth meeting from spreadsheets, but you don't want to confuse your clients in the first meeting. That's why we don't use spreadsheets. We use sliders and we use animation. We want to have you show up with a solution with a really cool, fantastic, professional looking tool that allows you to sit down and instantly the client relates to what you're doing and they go, wow, where did you get this amazing tool? You must be in the business of whole life insurance and infinite banking. You instantly look credible. So this tool is kind of a break. There's no moving parts to this. It's just a quick look and a view, milestone age of 40. What is possible? Again, no moving parts on this one. Very straightforward. Age 40. Remember, again, age 40 plus down here, what do we have? 30 years, 70. When you're 70 years old, do you still have a mortgage? Are your clients fearful that their children or they might still have a mortgage at age 70? It is absolutely remarkable how many people today, baby boomers, still have mortgages, still haven't paid off the home. Why? Well, they've leveraged it and leveraged it and re-leveraged it. Imagine you could leverage an asset to get the home, to never have to leverage it again, only to leverage it into other assets. See, the leverage that the people with mortgages still today, they don't own income properties like this 40-year-old here, but also they're leveraging to live their life. They're leveraging to put gas in their car, to pay their mortgage bill from their equity in their house. You get the idea. It's very, very tragic. So we have to think about the mechanism of control, the banking function. Again, whole life insurance through the infinite banking concept is not an investment. It is A banking function is a place to warehouse and store your capital, warehousing and storing that capital for the client's child at age 40 here in milestone age, based on what the data points that we talked about up here in the illustration. Again, follow my mouse up here in the original capitalization tool. What did we do? Yes, we funded $200 a month, Starbucks, Tim Hortons, or Dunkin' Donuts a day for 20 years only. Again, technically speaking, as we get more advanced and get you guys further trained up, we're going to be talking to you specifically about how to actually build these LifePay. There's more more compounding, more energy. Again, what does compound interest do in your client's life? One of three things. It works for them, it works against them, or they miss out on the opportunity to have it work for them. Technically speaking, a 20 pay is in fact having it work against them. But the reason why we illustrated at 20 years is because we want to make it relatable, and we want to have that first meeting show them what's possible in it. Imagine what it would look like for LifePay. Take these numbers, blow them up. We'll get into that slightly more advanced strategy. But for today, we're looking at a net investment or deposit, I should say. Actually erase the word investment. You know, editors could put like a cool line, not an investment, not an investment. Put like a line through that deposit. It's easy to kind of get mixed up. Hey, I still do too, human being. All right, age 40, $125,000, policy loan, collaterally assigned, get a line of credit from a bank. What can you do? Oh, you can buy an income property. Let's just say, now walking through this, high level numbers here. Again, we just want to show them what's possible. Of course, once you have them convinced, you have them tantalized, you have the client believing in what is possible through the lens of a child with the product of whole life insurance, you can get into the illustrations, the granular numbers that are bespoke, customized for that client. But for today, we just want to show them that this is actually possible for $200 a month for 48 years, 48,000. 20 years, $48,000. So the value of the home is $350,000. Say they're getting an Airbnb. They want to buy a small little cottage, or they want to get a little, like a tiny home, say, or a small condo in a rural area, or, you know, suburban type area. And they want to just get a door. They want turnkey. They want to be a landlord. $350,000. They're going to collect the rent right down here, $1,000 a month. Okay, they're going to do that for 12 years, $12,000. Over the term, again, 30 years here. This is the key number. Milestone age 40. Your client's child is now 40 years old. They have $125,000 in the policy. 30 years later, they've collected the rent for 30 years. $360,000, pretty straightforward math. $650 is $1,000, now the value of the actual home. So you're going to add, and that's amortized out at, appreciated out at about 2.5% only, which is very conservative. $650,000 is now the value of the home 30 years later, age 70. We're talking about values, $360,000 of rent. Now that's $1 million roughly in another asset. Let's go do a quick recap of what we're looking at now in the tool. You have $1 million of asset here at age 70, call it age retirement. The home, based on just these data, $922,000. The safe, the investment that you started to make could be a TFSA if you're in Canada, or a Roth IRA, or a 529, or a not a 529, or an IRA if you were in the United States. And then we're going to look at very simply here again the value you still have in the cash in here, which is around $500,000. So we're just going to go back to the real estate investment tool here, and what I'm going to ask you guys to do is to really kind of think about and asset, really think about what it is that your clients can do. You want to think about using the idea of leverage and identifying an idea of leverage that isn't central to risk. You want to be able to have the L word leverage, not with the R word risk. You want to be able to separate the two. You want to look at whole life insurance as a place to capitalize. And that's the key word, is capital. There's a difference. What lies inside and underneath a whole life insurance product is much different than cash. Even though it's cash value, it's really capital that you're looking at. And we'll talk economically about the difference between cash and capital. I mean, I think you can understand today, as I film this, it's mid-October 2021, you know what the world is talking about. Well, it's talking about inflation, and it's talking about crypto. Well, actually, that's another conversation. Another thing I'm actually a big fan of is crypto. And we're going to talk about another tool in the training that we have, an amazing crypto tool coming up. We may as well just throw the link for that and in this video as well. I'm just so passionate about standardized assets, because that's what we're talking about here, using standardized assets to buy other assets like the family home. Okay, there's $1 million. That's one property. Imagine what you could do with this 125,000, you're going to get way more than one unit running at an asset value of this, building this kind of equity with the Child Millionaire program at age 40. It lasts for life. And more importantly, what do you think that the child that's using this is going to do? When they're 40, they're probably going to be having kids. They've had kids likely already. You know full well that they're going to be coming back to you for more policies, or someone on your team, if you're recruiting using this tool, building a team, building a network. Think of network effects. Always think about your business. As advisors, I think recruiting to a great idea and sharing in your value, whether in your value, if you're one of our affiliates plugged into our affiliate program, or if you're directly involved in just overriding advisors, giving them value, putting these tools in their hands and sending them out there to actually make a difference, can result in business for generations. All right, there's a 5th video coming up. It's one of my favorites. You're going to go there right now. Just go to the video right now, watch it, and you're going to be about one step closer to making your dreams as a financial advisor come true.